Hey, welcome to the Stock Market Starters YouTube channel. If you're tuning back in, we are on our last day on our investment analysis series, looking at individual stocks. Today, we are looking at Home Depot. So first thing we're going to do is look here at the technicals. Then we're going to switch over and we're going to look at fundamentals and see what does the company's financials tell us. And then we're going to analyze it and we're going to look at a couple key things. And then we're going to chart its revenue, see what it looks like it's been doing. So let's go ahead and hop in. I'm excited to go through this. And then on our next video, I'm thinking on Wednesday, we are going to look at a comparative analysis and say, hey, we've looked at 6 companies after this one today, and let's see which ones are best and how they kind of stack up against each other. So anyway, Home Depot, first off, we're looking here at a 1-year daily view, right? We can see we've had some movement down, big movement up, more movement up, kind of a big pullback, and now we're in this sort of nice, easy uptrend here for the last couple of months. So if we go from here and we want to look at a longer term chart, we can look at our 3-year weekly chart. And of course, since it is a investment potential look that we are doing, we want to look at a longer term chart. So when I see this chart, I see a couple of things, right? I see this gradual uptrend that it kind of had going on here. Right? That was really that, right? That was that uptrend. So I can see that, right? I can see we, at one point a few years ago here, we're up here at $420 per share, came down all the way to 264. Now we've been kind of slowly moving up. Seem to have broken out of this particular little uptrend, came up, came back down into a little bit, but now we have our 50-week below us. We're sitting right now on the 10-week. And so I think really, long term, what this looks like to me is it has a potential, I think, to move back up towards these highs. Though we really have yet to see what this is going to look like on a weekly chart. So hard to say exactly, but not a really bad look here. If we pop back over to our daily, we can honestly probably get rid of those long-term lines. We really don't need them on there when we can always just go refer back. So that's kind of where we're at technically. It doesn't look too bad, but nothing, super, super compelling in terms of we need to go buy in right now. That said, we are kind of in a little bit of an uptrend here. So if we were to buy in, I don't think this would be a terrible spot to do it. So that's kind of our technical picture. Let's go ahead and look into the fundamentals. And of course, we're looking here on Yahoo Finance. Of course, there's other ones. We've talked through, hey, this isn't a perfect, perfect place to look at, right? We had some issues with Yahoo Finance on 2 of these stocks, but easy enough if we see something wrong to look at a different one. You could go to Google Finance, you could go to the company's website, right? A lot of times has financial information. So all sorts of different places to get this stuff. But when we're looking at fundamental analysis, we want to start with 2 main things. We want to start with market cap and EV, or enterprise value. So, right, that's telling us how big is this company, right? What's the size of the company, and is it going to go away tomorrow? Now, Home Depot is just a big company, so I expect this to be a big market cap. I don't expect to go anywhere. Yeah, market cap of 360.893 billion. So 360.893 billion. So, big company, biggest company that we've looked at so far in terms of market cap, right? 360 billion versus Verizon, I think, was our second biggest here with 175 billion. So, even double what Verizon is here in terms of the market cap. So that's kind of interesting. Next, we're looking for EV. And if you recall, EV is down here under statistics as of yesterday. So EV, enterprise value over all this. There it is. Enterprise value. That's what I want right there. 420.3 or 0.63 billion. So 420.63 billion. So what does that tell you between those two? Right? It's a plenty big company, right? It's not likely to go anywhere. That EV number is not telling me that they're in outstanding amounts of debt or anything like that. Maybe they've got some cash on hand. That's cool. So I think those make sense. Those are fine. Next, we want to see beta, and beta, of course, will be back up here. And we are looking in here, beta, a 5-year monthly, perfect. So a beta of 1, that's actually kind of cool. 1.0. So a beta of 1 means, if the market moves 1%, then Home Depot is likely to move 1%. Now, the caveat to that is, that doesn't mean that every single day it's going to move the exact same. That means that over a 5-year term, looking at monthly moves, right? It's basically the same. So kind of interesting to see an actual one. That's cool. So next we want to look at our PE and PEG ratios. So PE ratio, 12 months, 24.43. So 24.43. What that means, right, is that for each dollar worth of earnings, the current price right now means that investors are paying $24.43 per dollar that the company earns. So a pretty high PE ratio, really, compared to some of these others, right? We have 24.43, I think, is our highest. KHC over here was 23.2. We've had a 15, an 11, a 5, and a 9. So higher PE ratio, which I don't like in terms of the investment perspective, right? It means I'm paying more for less earnings. So, don't love that. Next, we want PEG ratio. So we want to come back down here again to yesterday's PEG ratio, 5-year expected. Now, again, this is a forward-looking number. So, there's some assumptions and things in here, but we're looking at 2.22. 2.22. So again, not a great number here on the PEG ratio, right? So they're saying basically over the next 5 years, for each dollar of future growth that's expected, investors right now are paying $2.22. So general rule of thumb is, if that's over 1, that means you're overpaying, for future earnings growth. So I don't really love those two numbers, the PE and the PEG ratio. Oh, not great on this one. So that's interesting to see. Next, we want to see earnings per share, so EPS, right? Coming back up here, looking at a trailing 12 months, $14.87. So that's not bad, right? $14.87. So that means that the company earned $14.87 for each share of stock outstanding. So that's a good earnings per share, right? That is probably a part of why, hey, right, we got a higher PE and higher PEG ratio because the company is making a lot of money per share. So that's pretty cool. That's also a part of what's going to cause the stock price to be so much higher on this one than we've seen on some of these others. So that's interesting to see. Next, we want our dividend yield, right? Want to see how much we'd get paid in dividends to hold this company. And dividend yield we are seeing here is $9 over the year, and that is a 2.5% annual dividend. So 2.50% annual dividend. So not the lowest we've seen, but certainly not as high as the 6% that we saw on Maine, not as high as the 5% on Ford or the 4% on KHC. Certainly not as high as the 6% on Verizon, right? But better than GM. So interesting to see that. Next, we want their EBITDA, right? Earnings before interest, taxes, depreciation, and amortization, which, if you recall, takes us out of here into the financials tab on Yahoo Finance to where we can see the income statement. And on the income statement, we have EBITDA down here at this 24,823. Okay, so this one, if you recall, is kind of silly the way that I've been doing it because all these numbers are in thousands, same as these revenue numbers, but on EBITDA, I want to know what this actually looks like. So what I'm going to do is do times 1,000 and make this a formula so it actually shows me the number. Okay, right. So we are looking at a big number here, right? We're looking at hundreds, thousands, millions, and billions. So 24.823 billion, right? 24.823 billion. So a big EBITDA number, which is cool to see, right? So they're making quite a bit of money on this, which is kind of interesting. Yep. So yeah, 24.823 billion. Very, very interesting to see that high EBITDA. I'm a little surprised. We're looking at those higher earnings per shares, but the EBITDA, right? A little lower than GM, quite a bit lower than Verizon, and then higher than everything else, but kind of interesting to see that. So let's look at revenue. We'll graph it here, and then we can kind of do our comparative analysis and see what we think if we want to buy a share here or not. So, of course, revenue is going to be our top row here on the Yahoo Finance financials. So we are looking first at 2020. Why is it not showing 2020 revenue? That's weird. Huh. 2, 3, 5. Have I been doing this wrong? Oh yeah, look at that. I put in the wrong year here. It's 2020. Yeah, okay. So let me go fix this really quick because that is wrong. It's 2021, 2022, 2023, 2024. Is that right? 2024. Oh no, I see. They're just reporting a different. Okay, I see what happened. No, they're just reporting it different here. So normally it's been showing 2020, 2021, 2022, 2023, and then this year so far included in a trailing 12 month. What it's doing now is they're showing they did it at the very beginning or the very end of January at the year. So they said, hey, this is our revenue over the last year, but it started at a different date versus, if we look at what's one of the ones, Ford, right? Ford, and we go to their financials. This one shows right 12/31. So Home Depot just did it a month later than these other companies have been doing. So that's fine. We can live with that. It's a little annoying for this example because it makes my analysis just a little bit different on this one than the others. But I can live with it. It's within 1 month, so not the end of the world, and it still shows, of course, that for the 12 months prior. So I can live with it. So we'll copy these over, graph them, see what the revenue trend is doing, right? So we can see generally going up, going up into 2023, at least these last two kind of staying flat. So kind of interesting to see that as well. Mass circulation. Yeah, no, this is cool though. So this is our last one, and then we can kind of compare these. And I will say this is not a super, super detailed, in-depth fundamental analysis, but it gives me a general idea. Hey, what do these companies look like? Do I see any huge red flags? And right, do we want to invest in some of them? Which is, I don't know, it's kind of cool. See, hey, basics of fundamental analysis. What does it actually look like? So got our revenue numbers. So let's go ahead and graph them. So we can insert a chart. And we will do these guys. Move it down here, and we will do. This is a Home Depot revenue trend. Very cool. So, all right, what does this actually look like? Home Depot revenue trend. We came up into 2023, and then the last couple years kind of dropping a little bit. So, interesting to see that their revenues are starting to drop. Right, having a harder time making some money. We've seen that in a few others, right? We've seen that with Verizon. We've seen that with KHC. So kind of curious, but of course we like these ones like GM, like Maine, like Ford that look like they are continually doing well at making higher revenues, a little bit better. So yeah, I mean, really interesting. So the question now is, do we want to buy a share, right? An example share of Home Depot. So let's think through this, right? The company's plenty big, right? That's fine. Beta of 1, so nothing concerning there, right? Nothing that I'm going to be worried about. With that, PE ratio and PEG ratio are higher than I'd like them to be. They really are. So I don't love that. I do like the $14 earnings per share though. That's pretty sweet, right? Almost $15 earnings per share. That's really high. And that's pretty cool. Dividend yield a little bit lower, but they do still pay the dividend, so that's good. 2.5%. I can live with it. Certainly lower than I really like on some of these others. EBITDA a little bit lower than I expected, right, compared to some of these others also. And then revenues, doing pretty well, but coming down a little bit. So truthfully, I don't like Home Depot as much as I've liked a few of these others. It's not as good of a picture as it's gotten some of the others. I do really, really like the earnings per share number though, right? That's really cool. But overall picture, I would say Home Depot, not a bad look, right? Like Maine, I didn't like overall as much, right? With the potential negative growth expectations, with it being a financial company, right? There is different rules, so the PEG ratio isn't really quite real. The EBITDA number here is not really quite real. Some different things like that. But I was still willing to buy the one share as an example, right? As not a bad deal. I think Home Depot, I'm gonna be willing to buy one share. It's not a bad picture that it's painting here. It's not quite as good as some of these others. I think so. I don't love it as much, Right, not my absolute top favorite so far, but I think I am going to be willing to go buy one share. So let's go ahead and do that as an example. And then here on Wednesday, we'll look and see what do we want to look into pursuing more in depth, more in detail, and going deeper on those investments. So as we come in here, we can go up here to the buy button. We can do buy. We want to do not 100 shares because that would be, well, bigger than what I've got in this account anyway. And so we want to buy one share at, that's the, so the mid here, right? So what's interesting, what I'm looking at here is the bid ask spread, right? On this stock is certainly more than 1 cent or 2 cents. But, it's a $363 stock, so that's not entirely shocking. Mid they're saying is, oh, what's the difference? 90 cents. That's not right. So a little bit bigger difference here on this. I'm gonna go ahead and put this at where it's telling me the mid is at. I don't know. Yeah, I don't know. I mean, it's not really that important. I'll put it right there, right at like 90. Yeah, I'll put it right at 90 and see if it likes that. Put a limit order. Yep, and that'll cost me $363. So that's kind of wild, but let's see what we got here. Hey, it filled. Perfect. So now we've got our one share there, so we can mark this row, show that I've got a live trade. So kind of cool to see, right? We got one live share here of Home Depot. So yeah, I mean, good stuff, right? We'll go through here on Wednesday and look and see, hey, comparatively, what do we think of all these different companies, right? What do we think of all these different ones? Oh, that's cool. Verizon's popping back up today. Right. Come and see what we think of them all. Compare those, compare these numbers, right? We'll do a revenue trend where we kind of look at all of this and comparatively decide, hey, what looks like the best one to continue pursuing. Now I have invested one share into each of these, which is very, very different numbers, right? When we're looking at a $10 stock versus a $360 stock. So when we look at, how kind of investment analysis normally goes, you look at, hey, I like this stock and I like this stock. Let me build a portfolio where it's sort of balanced between them in different ways. Now I have done none of that. Truthfully, I don't actually do a ton of portfolio balancing and diversification because I know how to do things like buy insurance, right? When my stocks start to drop, I know how to do things like once you have enough shares, you can make a promise to sell at a certain level if the stock goes up and you get paid for that promise, whether or not you have to sell. So there's some cool things that I know how to do where diversification isn't as important to me as it is for, kind of what you consider to be the average American investor. But, an interesting conversation we can have and look at, as we go forward. So kind of cool to see. Of course, we will continue our conversation tomorrow. And yeah, I'm looking forward to doing this comparative analysis. So until then, or not tomorrow, on Wednesday, looking at doing that Wednesday. So yeah, looking forward to it. Hopefully this is helpful, you guys, right? I've been really enjoying this investing series, going through it, doing the analysis here and kind of seeing what we've got. So yeah, looking forward to our next analysis here on Wednesday. And until then, happy trading and happy investing.